18th. We're going to be covering quite a bit of market movement again today. We saw a pretty crazy day yesterday, and really an inflation story all around the globe. I mean, it's really totally globalized. So we're kick that off, show how it's moving the markets, what key levels to look for today. Before we begin, just want to remind everybody that trading involves risk. If you don't believe that, just look at the Waltons that lost 27 billion yesterday. I really do hope they'll be all right. Thoughts and well wishes for them. But definitely consider your risk in the market. Make sure you're using risk capital that you can afford to lose, not grocery money, not mortgage. You hear me say it every day. Trading decisions you need to take accountability for and make yourself. We're going to be looking at some key levels in the markets. Obviously, many of you have been following Brian for a while. We pick out some great target levels. Please don't take these as a trade recommendation. This is for educational purposes only. And with that, Brian, let's get it kicked back to you.
Yeah, I was just reading the actual numbers, and it's it's crazy. They saw their family fortune drop from 241 billion to approximately 341 to 124 billion, 305 billion. So it's kind of funny, but it says Walmart is struggling after soaring inflation put pressure on the retailer's profit margins. And again, it's interesting when you hear Walmart talking about, hey, listen, we're having problems because of inflation. Obviously, profit margins are down, which means they are absorbing some of the inflationary costs and not passing it 100% to the consumer. But it's one of those things that, again, their duty is to the shareholder, not to not to the individual purchaser. So it's you can see that it is a battle that even Walmart is facing right now. That listen, it's inflation is really hurting them. And again, remember, not that Walmart has many borrowing issues, but as interest rates go higher to control this inflation, borrowing gets harder too. So, yeah, it's interesting, because we always talk about, you're talking about big box names, and you're seeing some of these big names like, oh yeah, people are still spending. Rich people spend no matter what's happening, right? It's the less fortunate out there, the middle and lower classes that really drive a lot of the GDP numbers out there. And when Walmart is again making comments that, hey, listen, it's really starting to hurt the bottom line, and we're absorbing as much as we can, but we can't absorb all of it. We're passing it, and if it goes any higher, it's just going to get worse and worse. So I mean, not that the Waltons are in trouble, but it just shows you, globally, or nationally, what we're kind of looking at here. So yeah, and as you mentioned, inflation is really the name of the game today. There was actually a disappointment, so it wasn't as bad. We talked about the pound yesterday during our session about, hey, what if it comes in at like 9.3, because they've been really just under forecasting this one. And again, this time, before they were doing small ones, 0.2 difference and raising it, 0.5. This time they expected a 2% gain. So maybe 2% was a little bit much. So it came in at 9 instead of 9.1, but it's still 9% in a year. So that's an absolutely monstrous number. But because of it, the market had actually prepared for worse than this. So the pound's actually showing some weakness. I mean, an example for one of the trades that we had talked about yesterday, one of the setups, was kind of looking at this area and saying, hey, listen, we had a parabolic move. We had a lot of basing. If we could be in there for news, which news came in at 2 o'clock this morning, which is right there, right? Kind of telegraphed that one, right? You can see that it came all the way back down and a decent mover from the news. That was 125 pips in a matter of 2.5, 3 hours. So showing just disappointment in that one. So it's kind of strange how the market was like, wow, this is going to be much worse than 9.1. And because it came in at 9, it moved an entire daily ATR in just a small amount of time. But again, taken into context, yes, it was a disappointment or a miss, but it still was a 2% increase year over year for the UK. And they've already raised interest rates 4 times. They're already at 1%. They've done the smaller raises, more consistent, and they're already seeing problems with their GDP, recession, food shortages. They're already having all kinds of problems, and it's still at 9%. So, yeah, good luck, UK.
It's amazing. In a lot of ways, the market looked at it like you went to the doctor, and the doctor said, hey, I've got to cut off your arm. Then comes back 15 minutes later and says, no, I've just got to cut off your hand. Woohoo! I mean, it's not still good news. It's not good news either way.
No, it's rough. And then we went into Canada just a little while ago. In Canada, not only did we have higher than over month over month. I mean, again, it was not as bad. It wasn't 1.5, but it was still higher than the expectation, and they expected a little bit lower, but it's still positive. And again, remember, Canada did start their raising as well. But on top of it, like diving into the deeper numbers, again, not just the overall, but and again, remember that there's core and regular. They have common, medium, and trimmed. All of those last time they were wrong. They actually had to adjust them all higher. And then the actual, so it's kind of that double where it's like, wow, we're much worse than expected. So, yeah, 5.1 as far as trim goes. What is trim? Trimmed is basically excluding the most volatile 40% of items. So, again, you're talking about the ones that are all crazy. I'll get rid of those. We don't need those. It's still up 5.1%, and their mandate is 2%. That's what's considered healthy. So, it says, consumer prices rose 6.8% year over year, a slight increase from 6.8. So, yeah, 6.8 year over year is kind of what they're looking at is their full year over year number. It's not quite UK 9, but remember, theirs also has a lot to do with oil and things. So, yeah, again, we're seeing the same story. Now, the only reason why we're not seeing probably huge, monstrous movement in the dollar CAD right now is because we are getting a little bit of a reprieve in oil right now. And that's something I think we should talk about. Again, the inflation story is no different, but yesterday we did get a bounce, right at the end of the day, right off that 111.96 area that we had talked about. It was at 23.6 and it had an initial pullback, and then bam, we gapped all the way down and we're kind of holding. But we're getting a little bit of a reprieve here in oil. So, yesterday we were up at one point at 15.50, being back down. Not that 111.50 is cheap. It has dropped $4 here. That means we're going to get, I don't know, what, maybe 1/100th of a penny at the pump. It does not translate directly across. So we're not going to get a gigantic reprieve there. But the reality is, again, we do have oil inventory reports today. That's something that we need to look out for. Actually, I didn't even pull it up. Let me grab the website real quick for the API oil inventory report. What is that? There we go. So I mentioned it earlier on Monday. I said, what if we had a big, last week we had a huge surplus, 8.5 million barrels. And I said, what if we had negative this week? What if it was big, like a -5? Right now, the industry specific report, they were expecting a surplus again of 1.5. It actually came in a little bit negative, -2.4. So, now the question is this reprieve? Is this kind of pullback? Is this preparing for, kind of a big government report? And again, what happens if we do come in at a -5 million barrels? That's quite a big jump. There's a little bit of an over-adjustment issue there. Could this be really kind of the rally point, or are they expecting that API number is just totally false and it is going to come in at a 5 million surplus? And then will we get the pushback down again? So, I think interesting levels of this one today. Again, we're right at the 23.6 level. It did kind of gap below it a little bit, and then kind of is reestablishing itself. There are bars below, and I think any top side targets, I'd be looking at the 114.83-ish range. One number, and again, if you take this easy, high to low fib, low to high fib, another area, and there is kind of a level down there, is this level, and this is at the 50% retracement level. So a lot of people will be looking at that 107.16. That would be awesome. Coming from 115 to 107 in 2 days, that would be great. I don't know if it's going to lower our gas prices, but it would be. It's the first. Put it this way, I don't know that it can make it worse, unless we, again, after Memorial Day when the summer gases kick in, that's going to be a whole separate story. So I don't know. Maybe we get a week of cheap gas and then it'll go to 450 or whatever. But those would be levels I'd watch out for. And again, this would be, if it is a really bad number, that would be the target down. But look to see how this one opens up. Look for that pre-positioning. And remember, we mention it every week, and pretty much every week it's working majority of the time. The 35-1 strategy that we did the webinar on for how to trade news, I'd look at it for this one. I think today this could be an interesting mover. But beyond that, the VIX is always something we mention. Again, the inflation story is there. We got some pretty interesting comments from Powell yesterday, but the market kind of shrugged it off like, whatever. Like it was kind of strange. I did expect hawkish statements from him based off of kind of how he always provides, like, all right, this is what we're going to do, and it's weak, and then he talks really, really strong. And then when he comes to action, it's really, really weak again. That's kind of been his go-to. But some of the comments, neutral is not necessarily a stopping point. If we have to go beyond neutral, we will not hesitate. We'll continue to raise interest rates until we see inflation coming down. We will tighten until we are at a place where financial conditions are appropriate and inflation is coming down. Again, way too hybrid to use everything we can. It would have been better to raise rates earlier with hindsight. Wow.
But it was transitory, Brian.
Transitory. Well, transitory, and then he's like, let's front load this. And Buller's like, hello, 7.5. let's
Yeah.
go, and nobody wanted to do it. They did a 0.25 on the first one. So
And
actually, I think Bullard actually called for 1 on the first one. But
yeah,
yeah,
he was like shock and awe. I think one of the comments that struck me was where he came out and said he needed to cool demand. And I'm not sure I'm clear on what that. I'm not sure that there's a huge demand story here, other than people are paying a lot more for everything. And in a lot of cases, if you look at the housing component of the CPI, a lot of people are
yep,
rushing in to get it now before the rates go up and the long-term costs escalate.
right.
So I'm not sure
Yeah,
there's
I
a
mean,
real true demand.
yeah, and it's not, and it's strange, demand is typically dictated by supply. So it's interesting in presenting his position. People are, look at the baby food shortage. People are paying double and triple for baby food right now, right? For the formula. It's not the demand is high, but why is the demand high? It's because the supply isn't there. The supply is low. Like, we haven't heard demand issues in the last 2 years. We've heard supply chain issues. So it's interesting that he's talking about the demand. Um, I don't know. Maybe it's the alien thing again. Maybe the bullet alien this week is back in. I don't know. It's kind of just, we're now setting policy on the expectation we get relief from supply side. So I mean, yeah, there may be some supply side, but I don't know. I mean, if you look at to see what the main drivers of the inflation are, we already know what it is. It's food and energy. Well, what relief could you possibly get? The food thing is not going to get better. Where the supply chain shortages are coming from is China. They're using the food, not sending the food out. And, all the effort is to block Russian energy. And that's the reason why energy is going the way that it has been.
And as you mentioned yesterday, India blocking their wheat exports because they want to keep
Yep.
it all internal. I
Yep.
mean, and that just has ripples around, the world.
Yeah. Oh, absolutely. I mean, it's huge. I mean, if you think about where it's coming from, I mean, the bread basket has basically been destroyed for Europe. I mean, the Ukraine, the fields are not there, the fertilizer's not there, the wheat is not there. Russia's got plenty. China has signed an agreement there, and India also is another one that is a producer, but they use a lot too. They've said we're not sending India out. So the two biggest producers, basically in the world, well, of the three, one of them has been destroyed. Of the remaining two, one of them you don't want what he has because that's Russian wheat. We don't want Russian wheat because eating is not important. And China said, "Yep, we'll take it." And India now won't send it, so it's got to come from somewhere. And the thing is with this is it's not instantaneous, guys. It does take time to come up with this. You got to get seeds. Oh, we need those too. So there's a lot going on here. And this is a point too. He said that there's more demand for workers than people to work by this is substantial margin. This is what we talked about, the JOLTS report, where there's 11 million people working. Eventually, what will happen is if they can make the economy bad enough and the situation bad enough, companies will say, okay, we're going to put a hiring freeze on. We don't need to hire people right now. If they can lower the demand for those workers, that's what he's kind of saying, talking about what lowering demand. And unfortunately, and you think about that statement, what conditions do you have to create to where companies are like, you know what, let's do some layoffs. Let's not hire people. We don't need people to grow. You're basically saying we need the economy to get bad and shrink so there's no demand to hire new workers. Because there's only 5,000 people that want to work. But we want to go. We want to go because the conditions are so great. But it just shows you how much of a failure the Fed has actually been. And again, people pat themselves on the back, be like, "Oh, the unemployment rate is so low." Yeah, but it's like you've created such a problem right now that we literally have twice the job openings than we have people working. Why? Because you funded it way too long because you wanted votes and everything else. So, yeah, it's just it's a situation, and this is what's even scarier right now. Fed President Neel Kashkari basically said it's not clear if the Fed will have to induce a recession to control inflation. Will they have to induce a recession to control inflation? I mean, think about that statement. And this is kind of what we've gotten to now. We're gonna make people's lives really miserable because we have to control inflation. And if you think about who it's going to hurt, it's not going to hurt the rich people out there. And again, this is supposed to be the party that is, for the general, for the poor. It's scary that now this is the comments that Fed presidents are making. So, again, today VIX up a little bit. Again, there's not a whole lot of news out there. It is at least on the lower side of things. We're not spiked up in this 30% range again, but because it is up to 0.8, it is a decent amount. Everything is starting in the red today. ES, again, yesterday we kind of drew these traps. And again, we got the trap low, kind of got the trap high, but it was end of day. Now we push back down again. So really not a lot of movement. We've pushed back down again. And this same level, we've already had some confirmed buyers there. It's not my favorite level in the world, but it's there. It's kind of set up. I mean, again, on a 15-minute chart, if we got down to there for the open, you can actually be swayed that, hey, listen, we got just down a little bit lower, right? A little bit lower down here at the open. I could be talked into buying that at 40, 30, 25. Again, it is confirmed. We know buyers have stepped in. That was a 1030 reversal. So it was an actual trading time frame, not an overnight position. So there's something in there. NQ, again, we talked about this coming through. We got a little bit of a push again. Powell's speech, the comments he made actually kind of rallied this a little bit. And then we kind of found that top. And I mentioned yesterday about really kind of trying to find a decent top in this one. And it has pushed all the way back down, but kind of the same scenario as the ES. We're at that same level yesterday where we got that reversal. So we know there are buyers kind of lurking in this area. And again, NQ is, been a little bit more sensitive to things. YM, same thing. There was that piece yesterday. If I continue it across, you can see, we talked about it yesterday being up at 32,600. It actually just completed now, so you would have had to hold it all day. But it just pulled back down again. So it would have been more one of those overnight-based trading positions. And again, same thing. It's back into an area we've seen sellers confirmed. Here's our original profit target where we talked about. So again, lurking at the same spot. And then Russell, kind of the same thing. Again, it punched higher. We were waiting for some type of a pull-through. There's kind of your hair powder of the drop and the confirmation entry of it. Yesterday we were sitting right around here. And we talked about really getting a decent confirmation on it. It came in. It just came in at 8 o'clock this morning. So I would say of all of them, the Russell's the one that really doesn't have a whole lot of buying right below it. The other three do. As I mentioned, oil, we're kind of still stuck at that same level. Natural gas, unfortunately, yeah, I mean, we did some bouncing. It was a battle, and we talked about this yesterday, these two levels in here. Here's where we were sitting kind of early morning, and we talked about, hey, listen, we're in a level right now, but it's got to fight to get through. There's another level backstopping at the 786 is there, and you can see it kind of bounce back and forth, bounce, and then kind of push lower again, and then found these buyers that help get through it. And we're kind of at that same level right now. But the reality is, while oil is pulling back, natural gas is just continuing to grind higher. And again, we have that upward target. We know once we pass this level, there is no indications really. There's a small level there, but no major selling coming in until 889. So it's like, wow, is $9 going to be on the radar? Gold did drop down a little bit. It actually didn't get stopped out from our basing level. We were looking for a little bit of a Harry Potter. Kind of got it, not the ideal opportunity here. Kind of pulled back again. We're still in that same range of that 815. Like I said, a lot of pointed comments about we need to go past, we need to crush inflation, we need to do everything we can. And we got a little bit of a pullback, right? A little bit of a pullback in here, but not nearly as much as it should have been based off the comments. Basically showing that the market doesn't believe a word that Powell is saying. So that's kind of a scary kind of piece in and of itself. Remember Yellen's position in the government? When that position used to talk, it was a major market mover, and now she shows up as a gray, a zero impact speech. Now Powell is saying we're going to go beyond neutral. We're going to crush it. We've screwed up already. We should have went in early, and there's no market reaction. The market is kind of looking at Powell as like, whatever, you're a talking head. It doesn't, we'll play it after the fact. What you say now doesn't telegraph anything. Your words don't mean anything. So that's kind of a scary thing too, because they were some really pointed statements. So who knows what the market will look to next for guidance. It's kind of scary. And then silver, obviously, holding that 2050 level. It's kind of grinding. I would say how yesterday was risk on. Today is more risk off. All the indices are down. Commodities are kind of mixed a little bit. They're a little bit jolted, but again, cryptos are straight down. Back under 30,000 for Bitcoin, Ethereum down 4.6%, Dogecoin down 4% again, back low again. And TLT kind of gapping up a little bit. So it's kind of the reversal of what we saw yesterday. It was risk on. Today is like, no, risk off. Walmart did bad. So that's it. Like I said, currencies, we're still getting that yen strength coming in, but I would say it's a little bit more mixed today. A little bit of euro strength, but the euro is not strong. It's just that the pound is weak because it's just not as big as it was. So,
euro strength is probably because didn't they say their inflation is stable, Brian?
Yeah, it's stable at 7. What do we say? 7.8%. We found it.
Yeah, it's 7.4, 7.8, somewhere like that.
Here it is. Yeah. Don't worry, guys. It's over. Euro, and listen to this statement. I'll read this and then we're going to roll for the day. The euro annual inflation rate was 7.4%. They're saying, well, at least we're not 9, right? In April, it was stable compared to March. A year earlier, the rate was 1.6%. European Union annual inflation was 8.1% in April. So it's not 9, but 8.1%. Up from 7.8 in March. So, but look at that. From 1 year ago, inflation was 1.6, was a little bit below the mandate, but not bad. Now we're at 7.4 is the annual inflation coming from there, right? And the entire European Union, 8.1. So, yeah, and some of these things are crazy. Malta 5.4. The highest rates were Estonia 19.1, Lithuania 16.6, Chesna 13.2. So again, remember, supposedly Russia is going to just completely implode because they're at 20%. Estonia is at 19.1, and they're part of the European Union. So, yeah, inflation, inflation, inflation. That's what we got.
Absolutely. That's what we've got globally. Thank you very much, Brian. With that, we will wrap for today. Just want to remind everybody that this was for educational purposes. Please don't take it as a trade recommendation or a solicitation to buy or sell anything. Remember, take care of your risk. I was at Amos Hotstetter. I've said this before. Take care of your losses, and the profits take care of themselves. So with that, hope everybody has a great day. And Brian, we will catch you tomorrow.